Organisational culture can be thought of as what is truly important within an organisation and how the people within it behave on a day-to-day basis. And that topic of company culture and its relationship to the management of risk is one that's received increasing attention in the years following the GFC, both from regulatory agencies and lawmaking bodies and from within organisations themselves. Today, what I'd like to talk about is some of the regulatory commentary on this topic in Australia in recent times, as well as some of the practical issues that confront companies who are looking to assess and shape their culture. And I'd like to suggest that this is a topic which, while it has obvious regulatory significance and importance for management of compliance and risk, also offers the potential for companies to obtain competitive advantage. So what are Australian regulators saying on this topic? We've seen just in the last 12 months a range of commentary from both ASIC and APRA, and that has taken a number of different dimensions. For example, ASIC's chairman and its commissioners have spoken about what they regard as the 3 Cs of strong corporate culture: effective communication from the top about the behaviour that is expected throughout the organisation, challenging behaviour that is not in keeping with those expectations, and not being complacent about the state of a company's culture. ASIC has also focused on corporate culture in its corporate plan and strategic outlook, and it identifies corporate culture as key to investor trust and confidence and market integrity. It indicates that poor corporate culture is often a flag for poor conduct, and for that reason it is focusing more explicitly on corporate culture in its regulatory activities. From a legal perspective, ASIC is advocating for changes to the law which, among other things, would see senior managers be held personally accountable for failure to institute a strong culture, and a similar topic is being considered by the current Senate inquiry into the scope of our foreign bribery laws. So how are organisations responding to that focus? I think it's important to reflect on this as a topic which, while it has obvious implications for compliance and risk, has potential benefits for organisations well beyond the management of those issues, and it has the potential to offer competitive advantage to companies. That is, if a company is and is perceived to be doing the right thing by its customers and other stakeholders, and is doing so better than its competitors, then that will have its own rewards, not only in terms of a superior public reputation, but also enhanced market share, improved financial performance, and other traditional measures of corporate success. There's been research conducted by the Harvard Business School, among others, which has demonstrated a positive correlation between strong company culture and long-term financial success. There's a related issue, which is that moving from a rules-based culture to a values-based culture, that is, what should we do rather than what can we do, is also likely to unlock valuable discretionary effort from employees. That is, that they feel empowered and inspired by a values-based culture rather than one which they perceive as being tied up in red tape and bureaucracy. Focusing effectively on corporate culture involves a number of very real practical issues for companies. First of all, corporate culture is not necessarily readily measured in the way that revenue or costs or output can be. Secondly, corporate culture is not static. Any significant organisational change is likely to impact on corporate culture. It's incumbent on boards and senior management to make sure that they have a handle on the state of a firm's culture, that they can assess it, monitor it and shape it as necessary. And in fact, in some industries, this is mandated by regulation. APRA's Prudential Standard CPS 220 is an example of that. So you need to have good information flow back up to senior management and to the board about the state of a firm's culture. And that's easier said than done, and there's no one-size-fits-all way to do that. Regulators such as APRA have made some suggestions about how to go about that, although understandably those suggestions are focused on issues of compliance and risk. However, if what you're interested in doing is assessing a culture not only for compliance and risk issues, but also to see whether the culture is consistent with the stated values of the organisation or is serving the overarching purpose and vision of the company, then that has implications for how you design the measures to assess culture in the first place. Next, boards and senior management not only need to monitor and shape culture, but they need to effectively communicate the values of the company throughout the organisation. They need to walk the talk, that is, they need to continuously model the behaviour that they expect to see reflected throughout the company. Also, while tone from the top is obviously key in influencing the culture of an organisation, equally important is making sure that that cascades through to every level of the organisation. Because culture is how we do things around here, it's critical that you have systems in place by way of incentives and reward structures which influence day-to-day behaviours and day-to-day decision-making of staff at every level of the organisation. And Australian companies are taking a number of interesting approaches in this regard. For example, we see major Australian financial institutions looking at moving away from traditional remuneration structures based on sales targets to ones which focus instead on conduct and behaviour. And we've also seen companies look at similar sorts of exercises in respect of the recruitment phase and the ongoing training phase. It's also important to make sure that staff at every level of the organisation feel empowered to raise issues where they see conduct that is inconsistent with the stated values of the company, that they feel truly heard by senior management when they do so, and that there is and is seen to be consequence for conduct that is inconsistent with those values.